everyone, this is going to be the market review for today, March 31st. Apologies for the lack of market reviews over the past week. I was taking a little bit of a break, but I am back, and so we are back to the regular schedule. So starting with today, I want to go over the wicks I had marked out on my screen on the 15-minute. Below the range, there was not much, as we did make a new low for 2025 during the secret profile, and I did not want to pull any wicks from 2024 just for the sake of convenience and time. But above the range, I did have my London high marked out, as well as the secret profile low marked out, as even though it does line up pretty closely with the bottom of the range, but still relevant to price, so had that marked out. And then this green wick that you see here is a previous low of 2025 that was taken out during secret profile. So with that being said, we can start looking at what happened on the 1 minute. The range was 41 ticks, so on the larger side, but well within our tradable limits, because we want to trade ranges that are 50 ticks and under. Our first breakout happened at 9:26. We didn't get an actual retracement back into the range itself until 9:30. So about 4 minutes. You can see here we violated our bottom fortification, but we got a closure underneath the range, as well as the candle after it with a bearish close, and also closing below the range. So with that, we continue expanding downwards. We hit the first standard deviation and close past it. We come down to the 1.5, and you can see here there is a small rejection that occurred. We wicked into actually the 2025 low that I have marked out, and yeah, you can see here we wicked into there and continued the move downwards. We hit the second standard deviation, got a closure past it, and then we expanded to about the third standard deviation, and at this point price had traveled about 100 ticks, so it is normal to see price exhaust or for the move downwards to stop. So we did see a reversal here, and it was a pretty quick expansion upwards. You can see here there was a doji that formed, which we know is a candle that typically occurs at pivots. So we pivot here and start expanding upwards past the second, past the one. We come back into the range. We violate our bottom fortification once again, and we do get a small expansion downwards. We do not get past this 2025 wick, and we continue moving up. You can see here we disrespect the bottom fortification and we retrace into the opening line, violate it, and then we retrace into the top fortification and respect it. This is presented as a retirement setup. You wouldn't have been wrong if you took this setup. It's just the wrong side of probability, but there's always opportunity for recovery. So moving on, we did come down to the bottom fortification. You can see here, after presenting a retirement setup, we really just came down to the bottom fortification and used it as support, and moved up and confirmed a false day. So with this breakout, we also want to see a retracement back into the range. You can see here we violate the top fortification. We want to see how price reacts. Next candle over, we disrespect it. Shift our eyes to the next point of interest, which is our opening line. And that gets disrespected as well in the same candle. So then we want to shift our eyes to the bottom fortification, and you can see here that was disrespected as well, and we continue to move down below the range, and we actually come into this secret profile low. We use it as support. We form another doji, both here and here, and then we expand upwards and we break out of the range again. There is a little bit of a ping pong that occurs between the 0.5 and the 2025 gap, but you can see we break out of it here. We hit the 1, we come back down, we retrace to the top fortification, we tap it, and we continue expanding upwards to the second standard deviation. Once we hit the 2, we retrace to the 1, use it as support, and continue moving up. And so you can see here, as we continue to move up, there was a doji on the 15-minute from last week's New York PM, and we did reject from there. We rejected all the way to the first standard deviation, used the first as support, and continued moving up. And we did get a closure over that doji on the 1 minute. And you can see here, after closing over, we retrace back to the 2. And heading into PM session, we also retrace into this wick from the AM session and continue moving up. And so price almost hits the 4. We do reject from it, possibly from AM, PM wicks from last week. Reject from there. We come down to this wick once again, use it as support. You can see here there's a bit of a ping pong that happens between that PM doji and the AM wick that we have marked out, but it broke out of the ping pong here, so this trade would have required more patience, but nonetheless, it was, the payoff was significant. And yeah, we used this as support. We reacted off of it and expanded upwards past the 4th standard deviation. And you can see here, we continue to expand upwards, and price made it to this previous AM doji that I have marked out, and you can see here we failed to get a closure over it and began to reject from that gap. So for the rest of PM session, it was essentially carrying out a rejection from that area, and yeah, that is my review of what happened today with price action. There were a lot of opportunities for good trades using MCR, and if you are watching this video and you don't know what MCR is, please join the server in the bio and take the opportunity to learn about a very profitable model. And of course, everything is free completely, including private mentorship and one-on-ones. I haven't yet mentioned this in any of my previous videos, but in the case that this is reaching someone that is not yet in the server, I do want to like extend an open invitation to the server and to all of the resources it provides. But yeah, that is my quick note as well as my review of price action today. And I hope you guys all had a profitable day, and if not, at least a good day. So yeah, see you guys in the next one.